Hello, welcome to Macro Point of View after a little break in our shows, but I hope we're gonna return with regular episodes. And for today's episode, I'm gonna show you the gold and the oil with the current situation in the last days of July 2024. Let's start. So for the first, we take a look on the gold. As this market reached all-time highs, as you can see on the chart here, it was 17th July. And after that, it returned mostly on the chances that there will be peace on the Middle East. The thing is, after those declarations made mostly by American officials that they are reaching ceasefire negotiations between Israel and Hamas, it's shown up there was some kind of attack on Israel's soil, killing at least 12 people, including children. Israel and the United States blamed Lebanon's Hezbollah for those attacks, but Hezbollah refused to take a blame on it, and Israel provided a full power to their prime minister to retaliate for that attack. We know that there was some Israel forces concentration on the Lebanon border, yet today's news, today is from the 29th of July 2024, the recent news says that Israel don't want to spark a full-scale war on the Middle East. It sounds good, but I'm not sure how they're gonna react, because as we are know that in the not so far past, Israel attacked Iran's embassy in Syria, killing one of the Iran's officials. Iran's take revenge. After that, Israel also bombed some targets in Iran, but Iran stopped there. They didn't escalate. Yet we don't know what will happen if Israel will attack Hezbollah, how Iran will take any actions or not, how they're gonna react. We don't know that. But the gold price is now kind of steady. As you can see, it fall down to $2,360 and bounce from it. And now we are waiting for Federal Reserve in the United States meeting that will start tomorrow, 30th of July, with their decision about the rates announced on 31st of July. Most of the market is expecting that they're not gonna change the rates, but there is no one in the market that expect to keep those rates after September meeting, mid-September meeting. So what market is expecting right now from Federal Reserve, from John Powell, is that they're gonna cut the rates starting September. It's in the market, in the prices, yet the dollar still has some chances to fall down a bit, fueling rising power in gold. Also, we have to keep a close eye on Middle East, because officials in Israel or in Hezbollah or in Hamas saying one thing is completely different sometimes from what they are really doing. So I'm not sure if this attack on Israel's soil from Hezbollah was kind of Hezbollah trying to stop ceasefire negotiations or not, but it might spark a full-scale war in that region, and we don't want that. Yet this is the thing that is gonna decide the gold's fate in the near future. Yet, as you can see on my chart, I had this zone here made between $2,270 and $2,300, which was a stopping area for the gold from falling since it crossed above $2,300 in April 2024. As you can see, we didn't fall, and I think this area is gonna be kept also here, even if there will be ceasefire between Israel and Hamas, and there will be no full-scale war between Israel and Hezbollah. So this is two scenarios, because it's not one scenario for the Middle East, it's two separate scenarios for Israel to be changing the gold prices. And the other one is Federal Reserve meeting, and after that, Jerome's Powell from Federal Reserve speech on Wednesday. So this is the gold situation. We are waiting. Also, we can see that from the news that there is a falling consumption on the jewelry, gold jewelry in China. But on the other hand, we've got rising investors demand, and it rise over 40% year by year, even with those high prices. Also, please remember that even if the Central Bank of China stopped buying gold in May and June, it doesn't mean they can stop buying gold at all, because please consider that in global reserves, average for the large countries is 16% of gold. 16% reserve is gold. And in China, currently is 4.9%. So that means China have to at least double the gold reserves. And please remember, last year the China, even with those high last year prices, was the first buyer in the world. So I think they're gonna return to buying gold even with the prices above $2,300. So that's the gold situation. And if the Central Bank of China will start buying gold again, that will be a completely bullish signal for the gold. And I promise there will be also oil situation. And as you can see, I also created here a small zone, as it should stop the price from falling further, $80 per barrel. And today, those $80 is also fueled, those drop to $80 is also fueled by this chances that there will be ceasefire on the Middle East. And also, oil will be affected by this ceasefire coming or not. This Israel-Hezbollah war coming into full scale or not. So this is another thing to wait. Also, China. The other side of the coin for oil is that they have probably some kind of recession on their economy. So it will be probably affect oil demand. And please remember, China is the main importer of oil in the world. So it's very important to keep an eye on their current situation in their environment, economical environment, of course, because the last meeting of their leading party in China didn't show any large helping programs, large rebuilding programs, large sparkling their economy. And it's really, really surprising. Of course, we have to keep in mind that everyone is saying that China is slowing down, because we all remember that China GDP was about 30% in the 90s or so somehow. But I think that most of the people stop thinking that it's not possible to keep 30, 20, even 10% GDP rise year by year. So I think 4.7, 5%, even 4% for a large country like China, second country in the world by economical standards, it's also very, very good. It's twice what GDP rising in United States, and it's even more for European Union. So it's still leading rise. So I think the moment that market will realize that China rising 4 or 5% per year, or even more, it's very, very good GDP change. But also, if there will be some kind of slowdown or recession in China, it will also affect the fuel price, the oil price. So I think if there will be more chances for ceasefire in Middle East, ceasefire between Israel and Hamas, also there won't be starting any kind of retaliation or full-scale invasion on Hezbollah forces in Lebanon, we can see $77 on Brent oil this week without much hesitation. Because China's situation won't change in upcoming days, but we can see some kind of PMIs from different countries, and it won't probably be very, very optimistic. So it also will drop some heavy load on future oil demand. Probably International Energy Agency will also reduce their forecast for 2024 and 2025 oil demand. Probably OPEC won't change their forecast as they need optimistic forecast to keep their politics. But yet I think more likely to continue dropping on oil prices. So we're gonna see in a couple days. I'm gonna change this color to something else, and I will leave it here so you can take a look in a couple days how it's gonna end, my prediction for oil prices. Thank you very much for your attention. Don't forget to subscribe to our channel. We're coming back with regular shows, and we have some plans to expand and be more and more reliable source of information and analyst for the market for all of you. Thank you very much. Enjoy your evening.